Hey guys, good morning everybody. Welcome to another edition of the AccessToTrade.com weekend update show. Hope everybody is doing okay. Welcome aboard for all you guys who are joining us for the first time via Facebook, Twitter, StockTwits, and obviously our friends on YouTube. Again, we do this once a week for the general public, kind of share the thoughts of the week from this trading point of view. And obviously getting everybody set up for the next week. So let's talk about it really quick before we go on. Again, we're only 1 week away, folks, only 1 week away from the second edition of the PS60 workshop. Okay, it's a week away. I'm very, very excited about it. The dynamics of these pivots, and for all you guys who've been following me for a very, very long time, you can see how incredibly aggressive these pivots are. We will be having a workshop. It'll be about 2.5, 3 hours, and then we'll do a Q&A. So there's gonna be a lot of value, guys. Covering. There's so many moving parts of this thing. Obviously, the 60-minute channel is very, very important. We're gonna be covering supply and demand, trading different intervals, when to tier up, when to tier down, managing risk via these channels. Why a flat trade is incredibly important. Reading order flow, identifying reload buyers, reload sellers. Just an incredible amount of information. And again, what's great about what we're doing is for all you guys who pre-register, you're getting the live webinar all the way through September 25th. September 25th. So you're seeing it playing it live. You see it play out live. And now on the 25th, next Saturday at 9 a.m. Eastern Time, we will cover all the moving parts. We're going to completely reverse engineer it, off hours. Break down why these things are so incredible, why these things are so aggressive, why stocks are moving, why they stop, why they have an incredible amount of room, when they don't have room, when to not take a trade, despite what we're seeing, the correlation between 60 minutes, 5-minute charts, why a daily chart is incredibly much more important than the 60-minute channel. So there's so many moving parts, there's so many moving channels, and again, the point is, if you're kind of stuck in neutral in your trading career, and again, I trade beta. These are very, very aggressive because beta has the biggest ranges. The Teslas, we'll get all into that in a second. The Teslas, the Netflixes, the Amazons, the Googles. The reason why this specific process works so well because they're incredibly expanded ranges. The bigger the range, the bigger profit potential, both on the long and the short side. So for all you guys who trade these things, again, we trade everything in the room, $40 stocks, $30 stocks. We sprinkle in some small caps as well, but predominantly it is beta. So if you are trading beta, folks, and you kind of are stuck, right? You kind of are stuck. Again, you don't need to, go to the drawing board. Okay, you really don't. Sometimes there's something in your trading that I found about 5 years ago within these pivots. There's a little bit of an arbitrage that we found. It could make that difference. It really could make that difference in your approach, in your psychology. Speaking of psychology, everything, if it was as simple as buying and selling, everything would be, everybody would be rich. The problem is the emotional part of trading, the emotional part of what we do every single day reflects on these setups, and we're obviously going to cover everything nut and bolt. Again, this workshop could literally be 12 hours. It could be 12 weeks. The point is we're trying to get as much important, viable information so you can be ready to go mentally, technically, and the most important part is we're trying to remove all emotional baggage from every single trader, break all the bad habits before they start, and really give you an alternative, right? An alternative way, quote unquote, to the normal that a lot of traders, unfortunately, because of social media and because of all the crazy stuff you see on social media, people just unfortunately don't know even exists. So I'm very, very excited about it. I will be on vacations. I'm actually, as soon as I'm done with this, hopping in the car, we'll be in the Hamptons for the next 5 days. So there will be no live pivots from Monday to Wednesday. I will return Wednesday night. So I'll be back in the live webinar for Thursday and Friday, nice and refreshed, so we can tackle and break down the workshop for Saturdays. For all you guys who are interested, again, we're only a week away, folks. Get really excited. This is really cool. This is really, really cool. We do this only once a year. This is only the second one, and the dynamics of these pivots have really dramatically changed from the last time that we did this workshop. So hopefully we'll see you guys there. So let's talk about the markets, right? Let's talk about the markets. Again, the theme continues, right? The theme continues: trade war on, trade war off. Again, who cares, right? It's the same price action every single time. You get the headline, they sell it off, and they take it back up. We've been suffering through the same organic, methodical headlines over and over again for the last 7 months. China trade war, highs. China trade war, highs. China trade war, highs. China trade war, highs. Now they threw Turkey in it. Okay? So it's the same thing over and over again. Again, that's why if you've been watching these updates for a long time, you know that the stock market for me is irrelevant. If you look at the final scoreboard, right, you'd see the Dow and the S&P were up 0.1%. 0.1%. The Nasdaq slipped 0.1%. So we had a flat. You couldn't get any more flat if you tried on the indexes. The scoreboard said there was absolutely nothing going on. The way the markets got to flat was an incredibly aggressive move in the indexes. We had a 400-point plus move 2 days ago. We had a very, very angry, very, very aggressive decline the day before that. And ultimately Friday, right? Ultimately Friday, just kind of get into the par value. So the scoreboard is irrelevant, right? The scoreboard is irrelevant. It's all about what we do for it. And again, the theme of the markets have been delta neutral to upward bias, delta neutral to upward bias, and they've been swallowing headlines along the way. And again, the market has been really good. I mean, for the most part, the trading opportunity has been really, really good. The only beef, right? The only problem we've had through the summer is there's certain days that the liquidity is terrible, right? The liquidity is terrible. And that's one of the things we're definitely going to cover in the workshop. Understanding when the liquidities dry up, well, do you even take the trade, right? Even if the trade works, do you even take the trade? And again, we'll tackle everything nut and bolt, but it's very, very important to understand when the liquidity dries up, it's not about being right, it's about being profitable. So there was actually trades this week that I couldn't participate in. I mean, you're talking about a 30, 40 cent spread in some of these beta names and 100 shares up in both sides. And yeah, the pivot works and the stock goes down $1 and change. But again, if you can't get any shares, what's the point of it's not an academic exercise. It's not a fundamental exercise. You want to be profitable. So if you're getting an eighth of your size, a quarter of your size, and you're trying to get full size, well, what's the point of the trade? Obviously, we'll talk about that. So delta neutral to bias, obviously in the markets, very, very strong specific names. The beta's been all over the place, right? The beta's been all over the place. Obviously, the big headline, right, is Tesla, okay? And everybody talks about Tesla, and there's a reason why people talk about Tesla. And again, if you know me and if you've been following me for a very long time, I love trading Tesla. It's not about the product. I love the product, right? I think the car is great. I live in New Jersey. The suburbs have been swarmed, right? They've been swarmed with Teslas all over the world, all over the place. But again, there's a lot of red flags, right? There's a lot of red flags. Obviously, the most exaggerated CEO that you could remember in a very, very long time has produced some tremendous results in his business career. But there's a lot of suspect, right? There's a lot of suspect, a lot of red flags, and it all started a week ago with the whole tweet. We're thinking about going private at 420, and the whole quote unquote hashtag, right? Funding secured, which will be an incredible patent for somebody soon. But it really is amazing how much of an emotional charge to say the word Tesla. You say the word Tesla, you'll have 5 opinions. This guy's a fraud. He's the worst. He's a criminal. And that might be true, right? And then there's other people talking about he's an innovator, he's a genius, he's misunderstood, the stock is going 1,000. Maybe that happens as well. Again, for us as traders, again, I don't care if the company comes, if they release their next car with 3 wheels and no steering wheel, okay? It's not gonna make a difference to me. I'm gonna still trade the stock both sides. But if you are long, if you are if you're a bull bias permeable, right? There's a lot of red flags, okay? Number one, that random tweet, again, like I said last week, did he want to create a fraudulent kind of environment for himself? Probably not, okay? But he has a really hate relationship with the shorts that he believes that has attacked the stock, which a lot of people believe is the right thing to do. And a lot of people say, hey, the company is bleeding money, they're gonna go out of business, blah, blah, blah. And that can happen as well. But, you have the SEC inquiry. This is going to be a prolonged effect. From last week, I said, I don't believe the company will go private. If it does go private, God bless, but I just don't see it happening for the next 6 months to a year. Then you have all these headlines with Silver Lake and Goldman Sachs, and then Goldman Sachs and Silver Lake is like, well, there's nothing really going on. I mean, there's nothing really going on. Maybe, maybe something down the road, and maybe, Silver Lake said maybe we're willing for an investment, but there's nothing concrete. And again, the longer there is no tangible news of funding secured, there's more doubts. And again, you can see what happened from the point, from the highest level of we're going private to where we close. And the longer there's no tangible news, the stock will continue to bleed. This is not even a play anymore on technical analysis. This is more of a play of, well, no news is bad news. Usually, the saying is no news is good news. No news is bad news. And again, until there is concrete financial update of exactly what's going on, you're going to see the stock continue to bleed. And again, the biggest risk here is, right, the biggest risk, especially if you're trading on the equity side, is being short the stock overnight, right? Think about it. The biggest risk is still short the stock equity overnight. Put-wise is a different size, a different issue. Being exposed via options is a different issue. You already know your max pain. But if you are short biased on equity, you might run into a headline. And the last thing you want to do is actually a tangible headline, because everything that it came down, there's a chance it'll go back up. So be very, very wary. This is now a headline to headline driven vehicle, pun intended. But until every single day that doesn't render a headline, you're going to see it bleeding lower and lower and lower and lower. And you can see how much potential you have to the downside, all the way to this linear regression line of potentially 280. Again, remember, the low from July the 30th is 286. I mean, this is still 20 points away. So you can see at least technically the potential for the move down. Matter of fact, guys, I've included, since I'm not going to be here for 3 days, I included an extensive actionable trading list for you guys. There's at least 10 to 15 positions, both long and short. You guys should watch for the next several days to get you through Wednesday trading session. Obviously, I'll be back for Thursday session. Again, the bleeding continues on Netflix as well, right? The bleeding continues on Netflix as well. Ever since they came out with very lackluster earnings, again, the stock has gone from 420. I mean, this is a 100-point move, right? This is a 100-point move since July the 11th. I mean, this is a month move, right? A month and change move of over 100 points to the downside. Even stocks like Google, who had a really good run, obviously a really, really big run, again, kind of stopped going up, right? And we're still, scoreboard-wise, we're still a stone throws away from all-time highs. And again, we had a pretty good pivot on Google. We'll talk about that in a second. But overall, a pretty solid week. Again, the liquidity I wasn't in love with. Okay, I just wasn't in love with. There's a lot of trades that I took and I did okay with, but again, like for example, there was a pivot on TTD, if you guys remember, in the beginning of the week. So I bought it off this sneaky pivot at 130. I couldn't get any size. The stock was up 2 points, and 2 points in the pivot. I was like, what's the difference if I didn't get my full size? Yeah, the trade was okay, and quote unquote I was right. But who cares if you can't be very profitable? So liquidity is still a concern. I believe the liquidity will still continue to be a concern for the last couple of weeks. The only reason why I say that, just like me, a lot of people are going to take advantage of the last 2 weeks of summer. I know summer is stretched out till September 21st, but everybody's kids, especially in the Northeast, I know Florida people already started school last week, but for us in the Northeast, school starts in the first or second week of September, so everybody's going to try to get as much, take advantage of as much summer left as possible before we get our asses handed to us in the Northeast with all these crazy winters, especially that we've been having. So that's that. So you're going to see liquidity return after Labor Day, and then all the guys who've been summering in Europe and the Hamptons and everywhere else need to start putting real money to work for for the window dressing, because again, when you're in a bull market, you're going to get window dressing. So the volume will return, the liquidity will return, but again, volume and liquidity are not the end all be all. You can't tell Bank of America, I can't pay my mortgage this month because I only made a quarter of my profits from last month because liquidity sucks. Yeah, everybody has problems, but that's that's not the concern of the market to provide you liquidity to make you whole. That's why it's very, very important to, again, when the market's very, very strong, very aggressive, you have to take advantage. When the market's passive, again, you can't drive 100 miles an hour in rush hour traffic. It just doesn't work that way. So as a trader, it's very, very important to switch speeds. So what do we expect out of this week, right? What do we expect out of this week? Look, delta neutrality up, right? Until the market confirms, and here's kind of the levels we should be watching. Double bottom here, right? Double bottom here on the NASDAQ 100, on the QQQs. Again, if they retest this level, and again, the Qs have been in its downtrend, right? The downtrend since August the 9th. Yeah, a whole 9 days ago, right? We've been in this downtrend for a whole 9 days. I mean, you remember how good the market was in that? Anyway, so 9 days the market's been a downtrend. This will be the line in the sand, especially for this week, guys. Set an alert. As you can see here, August 15th, the low was 178.12. Friday's low, 178.26. You guessed it, 178 is the line in the sand for all you guys who are trading on the option side. Once we start building below that 178 level, the first move should get to 177. Again, no Armageddon. We're not calling for this Armageddon move. Technically, again, stocks trade from supply to supply and demand to demand. So watch that 178 level. Definitely keep an eye on that. Let's talk about some pivots from Friday. And we started out pre-market, actually at 9:33. 3 minutes after the open. Facebook big level 174 breakdown. If you saw the news that came out, and not a lot of people saw the news. MercuryNews.com came out with some possible, and again, this is all alleged stuff, but if you can go on MercuryNews.com and kind of see it. But they came out some sort of news that Facebook was kind of misleading with ads, blah, blah, blah. And, we looked at the 60-minute channel. Hey, guys, 174, big level. If it builds below, it can flush. And again, here's Facebook. Here's Facebook. Here's the 60-minute pivot, right? Here's this whole 60-minute channel. As you can see here, the low of this channel was 174.01. Again, these are not random numbers, right? These are not random numbers. And once it broke, I caught this trade pretty nicely. Once it broke, you can see the big move here. It went all the way down to lower Bollinger Band at 172. Here was a chart that I tweeted, obviously after the stock triggered. And this was the daily chart, right, guys? This was the daily chart on Google. I go look at the daily, and when I tweeted it, it was 12:13. When I put it into the channel, obviously in our live pivot room, 12:15 breakdown needs to build. Google got hit. Google got hit again. This is another example of a bull market. It doesn't matter when technical analysis plays a part. And here was the pivot right here. Once it broke that 12:15 level, stock went down to 12:04. Again, nice move, really nice move there. Let's see what else we had. Nvidia, right? Nvidia. Here's a perfect example of again why a daily chart is very important, right? And people ask me all the time, is a 60-minute more important than the daily chart? And I'll tell you no. And the reason why was we had this pivot in the room, 246.25, right? 246.25. It needs to build below, right? Now check out what happened, right? If you look at Nvidia's chart, right? If you look at Nvidia's chart, here was the setup, right? I even tweeted the setup. Here was the setup before the stock came in. And if you look at the daily chart, right? If you look at the daily chart before it confirmed, you'll notice that 245.50 was major support. As you can see that right on the 100-day moving average. So if you looked at the setup and I said, hey, look, watch 246.25, it's a huge area. If it builds below, it can flush. The problem was it stopped at 245.5, right? Stopped there. And that was the area that buyers, right? Technical buyers came in and emotional buyers sold, right? And that was very important. And there was a reload buy. Remember in our videos, we talked about there's no defense between a reload buyer and a reload seller. But here was the whole point. And this is why we talk about reading order flow and understanding organic order flow. And again, this is one of the topics we'll cover, we'll cover at the workshop. Next Saturday, we talked about, there's a huge buyer right on support, right? There's a huge buyer. There's nothing you can do, right? There's absolutely nothing you can do if he's a motivated buyer and he has a lot more shares than the market's trying to absorb with. And I tweeted this out for everybody to watch. Just again, how important understanding reading level 2 is, watching order flow, right? I tweeted this out and I said, hey guys. And again, we had another pivot here, 57.25 on JWM. It's kind of relevant. It ran up about $1 and change. But here was a very important level. Let me just show you guys here. Let me just show you guys something. If I can't find it, I apologize. Yeah, so here was a tweet that I put on, right? Here's a tweet that I put on. I go, NVIDIA held that level, right? 245.50. There's a reload buyer sitting on daily support. If they could clean them up and later confirms lows, the stock should come in, right? The stock should come in. Again, it's not a level that I magically grabbed out of thin air. It's levels. It's daily levels that are supposed to be confirmed by 60-minute charts, right? Not the other way around. So eventually, guys, and I know a lot of you guys caught this trade in the live webinar, once they cleaned up that buyer, right? Once they cleaned up the buyer and the stock just couldn't rally, it was a big move. I mean, it was a really, really big move down. You know, there was, and it went down really, really quickly. It went down like $1.30, about a minute and a half. You know, so it was a really good cash flow trade, and ultimately the stock traded down to like 43.75. I still like it short for into the new week. So it's very, very important, guys. Again, like I say all the time, if it was as easy as clicking a mouse, you know, everybody'd be rich. The reason why this business is so hard is because of all the moving parts. It's because of all the nuances. It's because that so many new traders, they say, well, nothing is going on. It could be a slow day. Nothing is going on. You know what? I'm just going to leave for the day. And they'll never have the ability to see something live like a reload buyer getting cleaned up. These moments, guys, these hours that you're missing throughout the day are precious. You don't get them back, okay? These are free content, live free content, and no matter what your process is, every single trader needs to sit there and watch order flow. I don't care if you're trading a micro cap stock. Understand the moving parts of why your stock is not going. The chart looks great. Why is the stock not going? Again, the answers are on the details, folks. And unfortunately, a lot of new traders, there's only exposure to really good, solid education from the markets is social media. And when some guy is battering down your throat that you have to buy a 60-cent stock because it's going to go to 63 cents with 2,000 people behind it, unfortunately, you start to develop subconsciously so many bad habits. So again, guys, it's very, very important to understand all the moving parts. Not some, not a little bit. It's so important to understand all the moving parts. Again, every single day that you really put this into your subconscious, into your mental Rolodex, you're extending your shelf life. And eventually, like any professional trader will tell you, eventually the light bulb goes on and you do have your aha moment. So let me give you guys some ideas for Monday. I'm not going to give you guys everything. As you can see, I have an extensive list for Monday's session. But let me give you guys some ideas that I like for Monday. And by the way, guys, congratulations to you guys who did catch Tulo on Friday. This was right off the watch list, matter of fact, from Thursday to Friday. We talked about this 177 break. Let's start off with Tulo. It does look good. It does look really, really good. Nice consolidation. Keep an eye on this thing for next week. 179.50 build for possible extension to this 83 level for all you guys who are swinging it. Looks really, really good. Boeing, look at Boeing, man. Boeing had this really aggressive upgrade, right? Really aggressive upgrade a couple of days ago. And now it's very, very close to busting out. Very, very close to busting out. As you can see here, it stopped on supply here at 348.5. If this thing can just confirm, look at the 60-minute channel, guys. If this thing can confirm, right, the 348.5, 349 level, your first move should be about 52. If you're swinging the stock for all your option players, who knows? You might get a move to 364 if the market continues to be really, really good. So keep an eye on Boeing as well. Again, look, what do you want to say about Tesla, right? What do you want to say about Tesla? Look, as long as there's, again, like I said before, as long as there's no new concrete funding news, the stock's gonna keep on going lower. It's just a fact. I don't care. You can love the company, love the stock. It's a fact. The only thing that's gonna get the stock from stop bleeding is they need to come out with materialistic financial facts. That's it. That's the bottom line. If the stock gaps up on Monday, it's a gift. Okay, I'm telling you right now, it's a gift. If the stock gaps up on Monday, it's a gift, guys. Keep an eye on this break below this 303 level. If it gaps down, obviously watch opening range lows. And for your option players, again, look how much room you have. You have room to like 280. I mean, there's a lot of room here. So again, no news is bad news for Tesla. So it really, really needs to come out some concrete facts, maybe something over the weekend, but maybe not as well. So, again, beware when you're trading Tesla. Also try to trade smaller size because you're always one headline away from going on tilt. So be very, very careful with Tesla. I like this CGC. We put this in the room on Friday, 33 bucks. It took out these highs. It looks higher. The recent high was like 36.50s. Look at the 60-minute channel here. Keep an eye on this thing. If it starts taking out 34, again, the initial move, this Bollinger Band will rise. But the initial move, if you're trading for a scalp, It's going to be about 50, 60 cents. But if it's establishes and confirms this upper channel, obviously you get a bigger move, possibly to the 40 area. Who knows? Again, it's not really my thing, but if that's your thing, definitely keep an eye on that. Let me give you guys a couple of other names that look pretty interesting. TCMD. TCMD looks good. TCMD looks good. The 60-minute channel is winding up pretty nicely. You can see the daily chart is lining up pretty nicely. I think it just needs a build over 60-30. Just keep an eye on this thing. If it starts building, confirming above 60-30, you could get a move to 62. And Sono, recent IPO, looks good. Recent IPO looks good. As you can see here, it got rejected twice on supply. If it could start building above this $19 level, again, the market gets better, that's it. It could be good. It could be good as well. So, guys, again, I'm on vacay. After I'm sending this to our editing, I'm on vacay for the next 5 days. If anybody needs me, you can always email me. I always email you guys right back. If anybody needs me, just email me. Again, for the rest of you guys, have an awesome week. Remember, again, guys, we're not doing this workshop once a week. You know, this is once a year, and the dynamics of this change. The dynamics of this change every single week. We always find better things. So for all you guys who are attending the PS60 workshop next Saturday, I'm looking forward to it. I will be rested. I'll be really, really ready to go, and I'm very, very excited to share with you guys what we've been kind of knowing for a very, very long time. And again, just like I said before, anybody who is pre-registering prior to the August 25th deadline, you're going to get the webinar. You're going to get the live webinar, included from the day you sign up all the way to September 25th, so you can see it play out live. Guys, I love you. Have a great, great trading week. Again, stay focused. Don't deviate from the process. And again, it's all about longevity. Guys, God bless. I'll see you all next week.